Okay, good morning and welcome to my morning forecast on Friday the 4th of July. As always, we'll look at key areas of market structure and high probability areas of interest. So, starting a daily on the euro dollar, we can see that the swing structure is bullish, the internal structure is bullish, and we have this weekly supply from way back, which has been mitigated. So, from there, we can expect to see a deeper pullback. After this leg of each candle breaking the previous candle high, we've had two candles where we've not been able to break the high, two red candles where we've broken the low. So this could easily be the start of the daily pullback. Obviously, we're not going to get a chock on the daily until we break this low because of the way this leg was formed. But that doesn't mean we can't look for shorts in this pullback. There is this area of demand that we can move to, and yeah, it's gonna be, like I said yesterday, take a long time to get to this area of demand, so we don't need to forecast past that. If we look at the 4 hour, we can see that the swing structure is bullish, the internal structure is bullish, and yeah, just like on the daily, we have broken the previous high, so we're in phase A2, which means a pullback is fairly likely. So start to see a bit of sideways action. We've got this small internal structure is the small internal structure is bearish. Obviously, the full internal structure won't flip bearish until this point, and we're not going to get a chock until this demand zone fully fails. So yesterday we had some news. Yesterday we had non-farm payroll, as today's the 4th of July. They did it on Thursday. So obviously that's this big red candle, which interestingly pushed all the way into this supply, into this demand, and then we had a reaction from there. And I think if we go to the 1 hour, yeah, it's even cleaner. Like pushed into this sweep zone, had a wick, and then had a huge pullback in the other direction. And I've not seen this before, but the wick came all the way into this supply, and then we started pushing down. So that's pretty cool to see. We do have this area of supply above, but I've noted that it has been mitigated by this wick. So maybe that this has already been used up. But if we are going to see a move down, then it wouldn't be too surprising to see it pull deeper into this zone and then move down. If that happens, then I will be happy to trade in line with the bearish order flow. Let's pull these out of the way because they've been mitigated. We do have this unmitigated area of demand at the extreme with inducement in front of it. Obviously, the inducement's quite far away, so we would like to see something build up on this side. So yeah, I would quite like to see a bit of a slowdown as we approach this level and then pop into it, then see a reaction, and then we can start to trade in the bullish order flow. Obviously, if we are getting a 4 hour pullback, then we're likely to just run through this, or we can see a reaction from there. So we'll be aware of both scenarios and trade accordingly. This could just be a small reaction before we go down. If we get a slowdown into it and then we break this high, then we can look for longs. If not, and we just approach into it, not really slowing down, then it's likely to get run through. So if we look at the pound dollar, we can see that the swing structure is bullish, the internal structure is bullish, and we have had the sweep of these highs recently. After the sweep of the highs, we've pushed lower, quite a strong red candle, which caused a daily chalk. So the daily chalk can be an indication that the internal is going to switch bearish, and that we could be starting a deeper pullback. To be honest, if we start but this sweep zone is already in the discount of this leg, so this could be the catalyst. Could just be pulling back into the sweep zone and then carry on higher. If we look at the 4 hour, we can see that at the bottom of this sweep zone we have the extreme POI, which is a sweep zone. So we've got a sweep zone within a sweep zone. So this is quite a high probability area to send the market up, and it's in the discount of the daily leg. So I wouldn't be surprised if we can push down into here and then start to see price move higher. So we do have this internal break of structure, but we couldn't close below. So internal sweep, and then and then we tried to push down again, and we couldn't push down. So after the sweep, we've had a big push to the upside, and then we've been a bit sideways. We obviously have this area of supply above, which can act as which can cause a reaction if we push into here, especially if we cause a bit of inducement before. Then we can follow the bearish order flow down. And if we are to look on the 1 hour, what can we see? We can see that was ran through. Here's the daily chalk. So yeah, we can see here that we have a couple of levels of supply. That we could use as reaction points. So yeah, we can see that we do have a couple of levels of supply that we can use as a reaction point. When this level formed, we did actually pierce this 4 hour demand. So we don't need to pull all the way back into this demand because we've already been there. So this could easily be a pull into here and then a reaction, and then we can start to move down. Or we can just carry on cruising up. So we need to be ready for each scenario.